Hello, and thanks for tuning into the Deep Dive. Today, we're really cutting through the noise to understand something that's definitely on everyone's radar: Bitcoin's immediate future. We're asking, what's actually likely to happen with Bitcoin's price, short term, and maybe more importantly, who are the key players pulling the strings right now? Our deep dive today, it's built on some really fascinating new research. It comes from the crypto analytics firm Glassnode, and it was reported by Cointelegraph. So our mission is basically to unpack these insights. They could really dictate BTC's next moves, revealing, both potential downside risks and some exciting breakout possibilities. This isn't just about skimming headlines. It's about giving you, our listener, a clearer picture of what's actually going on underneath, the market dynamics. Okay, so let's jump right into the core of this Glassnode analysis then. They really seem to zero in on one specific group of investors. They're saying this group is currently the main influence on Bitcoin's short-term price. They call them short-term holders.
So maybe you can tell us, who exactly are these STHs? And why do they matter so much right now? Why do they hold so much sway?
Yeah, it's pretty interesting how these sometimes seemingly niche groups can genuinely dictate where the market goes, at least in the short term. So short-term holders, or STHs, Glassnode defines them as any entity, any wallet really, that's held Bitcoin for 155 days or less. Now, their significance, it really comes down to their cost basis.
Cost basis.
Yeah, which is simply the average price at which that whole group acquired their Bitcoin. And this average price, this cost basis, it acts as a really crucial reference point, especially, during Bitcoin bull markets. It often provides pretty significant price support.
Ah, okay. Like a floor.
Exactly. Their actions, their buying and selling, can heavily influence those short-term price swings. Think about it. If a huge group of people just bought something and the price drops near their entry point, well, they might buy more to average down, or they might panic sell if it breaks below.
Right. So knowing their average buy-in price is key.
Precisely. And this Glassnode metric, it allows us to actually see that average price for this whole cohort. It gives you this powerful, almost like an X-ray vision into the market's psychology right now.
X-ray vision, I like that. It's like seeing the market's nervous system.
Yeah.
So if these STHs are reacting to every little twitch, what happens if there's a gap in that system, like this air gap concept Glassnode talks about? Tell us about that, this potential dip they flagged. What does it mean for Bitcoin's price?
Yeah, exactly. This air gap, it refers to an area in Bitcoin's cost basis distribution profile where there's a noticeable lack of investor buying, a lack of volume. Glassnode pointed out that when BTC/USD rallied really quickly, specifically from around $110,000 up to $115,000, there just wasn't much time or opportunity for investors, particularly these STHs, to actually buy in that range.
It moved too fast through that zone.
Right, so it created what they call a void of volume. It's kind of similar conceptually to how gaps work in the CME Group's Bitcoin futures market. Those gaps often created over weekends.
Yeah, people always talk about those getting filled.
Exactly. Now, Glassnode is careful to say, look, not every single gap like this has to be backfilled. It's not a guarantee. But there's a kind of gravity that exists. It makes that $110,000 to $115,000 region a really key zone to watch for potential support if the price does pull back.
Okay, so that can mean, what, roughly a 7% drop from where we are now, potentially?
Potentially, yes, around that mark. It's also worth mentioning, though, that their data shows a huge amount of investor accumulation. Lots of buying happen higher up, specifically around the $117,000 to $122,000 region.
Oh, interesting. So that could be a stronger, more immediate support level, maybe?
It could act as more immediate support, yes. It just highlights how much volume actually came in at those more elevated prices recently. A lot of STHs bought there.
Got it. So it's like the market kind of hates a vacuum, right? Whether it's trading volume or a futures gap, it feels this pull to go back and sort of tidy up.
That's a good way to think about it. That pull or gravity seems to be a real underlying force Glassnode is pointing to.
Okay, but that's the downside picture. What if Bitcoin ignores that gravity? What if it pushes higher instead? How does this analysis, looking at these short-term holders, help us figure out the upside potential and where things might, hit a ceiling?
Right, good question. Because the STH cost basis isn't just about finding potential floors or gaps. It's a two-way street. It can also help pinpoint levels where these STH cohorts start becoming profitable, and crucially, where they might decide to sell and take those profits. That creates resistance.
Okay. So they're average buy price is support, but maybe some statistical level above that is where they sell.
Exactly. Glassnode uses a technical tool here. It's a standard deviation measure. Specifically, they look at the +2 sigma band, that's +2 span, based on the STH cost basis.
Okay, standard deviation sounds a bit technical. What does that mean in plain terms?
Yeah, basically, think of it like a statistical boundary. It helps identify a price point that's stretched pretty far from the average, in this case, the average STH buy price. When the price gets that far above the average cost basis, statistically it suggests the market might be a bit overextended, at least for this group. It signals a level where selling pressure or resistance is more likely to kick in.
Got it. So it's identifying potential profit-taking zone for these STHs.
Precisely. And they've identified the $140,000 region using this. Even more specifically, they highlighted the $141,000 mark. That's flagged as the next major zone of potential resistance. If the market breaks convincingly higher, Glassnode suggests this 141K area is where sell-side pressure may intensify rapidly.
Because the short-term holders start hitting their profit targets.
Exactly. They start locking in gains, and that selling pressure could potentially cap further growth, at least temporarily, creating a local top.
Wow, okay. This analysis really does give us a much more granular view than just watching the daily price swings. It's fascinating. And it's really important we reiterate this for you, our listeners. None of this is investment advice. Definitely not. What we're doing here is a deep dive into how market analysts, like the team at Glassnode, use these specific on-chain metrics, these behavioral patterns, to try and identify potential price movements. It really changes how you might look at what's driving things day to day.
Absolutely. And that's the real value, I think. Understanding concepts like short-term holders, their cost basis, these air gaps, even the standard deviation stuff, it genuinely allows you to cut through so much of the daily market noise, the emotional reactions you see flying around. This kind of detailed analysis, because it's based on actual blockchain data on what people are doing with their coins, it helps you understand the underlying market structure. You start to see the potential behavioral patterns of these key investor groups.
Yeah, it offers a much more nuanced view than just staring at a price chart all day.
It really does. It encourages a deeper level of critical thinking about different ways to analyze the market and figure out what might truly be moving prices.
Okay, so let's quickly summarize what we've unpacked in this deep dive. Glassnode's analysis, reported via Cointelegraph, it really paints this dual picture for Bitcoin's immediate future, doesn't it? On one hand, you've got the possibility of a dip, maybe that 7% drop we talked about, to fill that air gap down around $110,000. And that seems driven by the behavior and cost basis of short-term holders. But on the other hand, if the market breaks higher, those very same short-term holders could be the ones who cap the rally, maybe around $141,000 as they start taking profits.
That's the core dynamic they're highlighting, yes. Both scenarios heavily influenced by this specific group.
So it really leaves us with something to think about.
And perhaps a final thought for you, the listener, to mull over. How do these kinds of deeply technical analyses, the ones based on actual investor behavior and cost basis, how do they challenge or maybe even confirm your own understanding of how market prices are really formed? Something to think about.